Good morning or good afternoon, everyone, based on where you are. We hope you're having a fantastic day today. Great start to an early summer. Today, I am so excited to be joined by Shelby Ashley. She is from Optimized Financial Solutions, and today she's going to be discussing improving the profitability and cash flow in your construction business, a very important topic for just about everyone here today. I'm also very excited to announce that coming up next, we have the State of the Metal Building Erecting Industry, and that's going to be presented by Roofers Coffee Shop. So please stay tuned in just 2 weeks for that one as well. As you all know, MetalCon registration is now live and open. We also have a very limited number of hotels still available, so please check back as soon as you can on the website listed on the screen so you can make sure you get your hotel and you get that great discount we all offer. As I just stated, MetalCon is coming up in just a few short months. MetalCon is the world's largest metal construction industry trade show, and we are so pleased to be in the city of Atlanta, Georgia this year. Registration is open, so make sure you check online and get your tickets. Registration is open now with early bird pricing, so be sure to check back. We've got some fantastic workshops. We have some special pricing, so make sure you go check out that website as soon as you can. As always, at the end of this webinar, you will be given the opportunity to fill in a very brief survey. That survey is used so we can get you your certificates of attendance. If you'd prefer just to receive your certificate of attendance, please email me, kaylin@metalcon.com, and I'll be happy to get that over to you. Without further ado, I'm going to hand this over to Shelby Ashley. Shelby, go ahead and take it away.
All right, thank you, Kaylin. I'm going to go ahead and get everything pulled up here. Okay, so hey everyone, my name is Shelby Ashley and welcome to Improve the Profitability and Cash Flow in Your Construction Business. So today we're going to be talking about 5 challenges that 90% of business owners face, why profit is more important than revenue and why cash is more important than profit, and then 4 steps to increase the profitability in your business this year. So again, my name is Shelby Ashley. I'm the founder of Optimized Financial Solutions, and I am a virtual CFO, which just means that I help businesses grow your profitability and your cash flow so that you can work on your business instead of in your business. I was a financial analyst in the corporate world for about 10 years, and I just thought, why am I helping these already rich CEOs make more money when I can be helping smaller to medium-sized businesses do the same? And that's really what I'm passionate about, is helping those smaller businesses that are in the construction industry that really don't have the time to go over their financials, understand really what's going on in their business and what they need to do about it. So challenge number 1, the business relies on the owner or it all falls apart. So you got into your business because you're an expert at your craft, whether that's roofing, HVAC, whatever it is, but now you find yourself wearing all the hats. So you can't even take a week's vacation without everything just falling apart. In fact, you're probably wearing hats that you don't want, nor are you particularly good at. So you need to spend most of your time on the things that you are good at and that you do want to do in your business. Challenge number 2, the business owner is constantly battling a catch-22 situation. So this means you can't grow your business without money, but you can't get more money without growing your business. So you started your business to create freedom of time and freedom of your money, but when there's not enough profit, the natural way of thinking is just to hustle harder and do more. But until you can remove yourself from the day-to-day operations of your work, you're going to be frustrated because you will be the bottleneck in your own business. Challenge number 3, the business owner has no simple way to understand what's working and what's not. So your typical financial reports, like your profit and loss, your balance sheet, these are made for accountants. They're not made for business owners. In fact, the accountant's job is done once they've recorded the past correctly. So then you as the business owner say, well, great, what do I do with this information? How do I use this? So these statements are downright confusing, and sometimes it's like they speak a foreign language. So it's hard to know exactly what's working and what's not just by looking at these reports. So how do you make decisions when you don't really understand what's going on in your business? Your accountant and your bookkeeper are paid to convey your profit and cash flow, but they're not paid to help you improve your profit and cash flow. So what do? You either hire a CFO or you strategize yourself. Challenge number 4, the business owner does not have clear goals. So how do you know if you're making progress if you don't know where you want to end up? Most business owners don't have clear and well thought out targets. Specifically, they don't have targets for revenue, profit, or the bank account. So like this is the equivalent of getting in the car and driving around without a clear destination. You're just going to waste a lot of gas and a lot of time. And then challenge number 5, the business owner does not have a clear path to follow in order to have a growing and more profitable business. So there are thousands of things that you as a business owner could be doing in your business each day, but only a handful of those things are going to actually make a difference when it comes to your profit and your cash flow. So once you know where you want to end up, you need to know how to get there. And most business owners don't have a solid plan of what to do or how to do it so that they can achieve their targets. So let's jump in to 4 steps to improve the revenue and profit in your business. Some of these might seem obvious, and then some probably not so much. So step number 1, of course, we need to generate more cash than we spend. So it's not what you make, it's what you keep that matters, which sounds obvious, but if you make $10 million in revenue and you only keep 1,000 of it in profit, what was the point? Your traditional income statement has sales minus expenses, which equals profit, but that doesn't tell the whole story. So how many of you have gone to your accountant at the end of the year, you got told how much you made in your business and asked, well, where's all the money? How many of you have actually gotten a satisfactory answer to that question? So every business owner must focus on generating positive, consistent cash flow from their business, not revenue, not profit. And your cash flow is the amount of money that's added or subtracted from last month's bank balance. It can be positive or it can be negative. So if last month's bank balance was $10,000 and this month's bank balance is $8,000, you had a cash flow of negative $2,000. Whereas if last month's ending bank balance was $10,000 and this month's ending bank balance was $12,000, then you had a positive cash flow of $2,000. So what we're going for here is consistent positive cash flow. So now that you know that you need consistent positive cash flow, how do you get it? All of the answers are in your numbers, yet most business owners aren't looking at the right ones. You have your accountant or bookkeeper, but they're paid to tell you what happened in the past and get your taxes done. They're not equipped to help you find those numbers that are driving your profit or tell you what to do in order to move the needles. So you need to focus on a few key numbers, and then you'll understand which ones are preventing profit and cash leaks the most. Not all of these numbers to pay attention to are in your financial reports, which is what makes them so confusing because they don't tell you the whole story. So which numbers do we need to pay attention to? You need to pay attention to what drives cash flow. And there are 16 drivers of cash flow. Why are they called drivers? Because they drive or influence the outcome. So once you understand the reason cash flow is off, you'll be able to take the steps to fix it. So let's jump into the 16 drivers of cash flow. All of these are equally important, but which ones you need to focus on in your business depends on where you currently are. So the first one is leads, and this is the number of ideal customers that have been made aware of you. So your leads measure how well your marketing dollars are being spent. Then we have conversion rate, which is the percentage of leads that become paying customers. So your conversion rate measures your sales effectiveness. So how good at you are converting those leads to sales. And then we have retention rate, which is the percentage of customers that come back each year. So if you can improve your purchase frequency rate, you can earn more revenue without spending additional money on marketing. And your purchase frequency rate is the number of times a customer purchases from you in a year. And then we have average transaction value, which is the average value of every purchase that a customer makes. Next, we have cost of goods sold. So this is how much it's costing you to provide the goods of each sale. So I had a client who his cost of goods had risen 70% in 6 months, and he had no idea because he wasn't tracking this on a monthly basis. So we looked into it and discovered that one of his suppliers was experiencing a quality issue, and they were passing that cost onto this customer. And he had no idea. And so we had to quickly work to find a new supplier that was not doing this to their customers. And then we have marketing expenses, which is the total cost of your marketing. Payroll expenses, which is the amount of payroll that's not included in cost of goods sold. So this is like all of your admin labor. We have overhead expenses. This is all of your operational expenses, like your rent, utilities, insurance, that kind of thing. And then we have other income and expense. These are those kind of one-time things, like a big insurance payout or a tax refund or something like that. So the first 5 of these drivers are what drive your revenue. So your leads, conversion rate, retention rate, purchase frequency rate, and average transaction value all make up your revenue. The first 10 of these drivers are what drive profit. So everything starting from leads down to your other income and expense is everything on your profit and loss statement. So most business owners and accountants stop here, but your profit exists on paper only. Okay, so your profit doesn't pay your employees. Your profit does not purchase new equipment. So how do we bridge the gap between what's on paper and how much cash you actually have? You can last years without a profit, but you can't last a day without cash. I think it was Amazon that went like 5 or 7 years without a single profit. So how were they able to stay in business? It's because they had cash. So that's where the next 6 of these drivers come in. So first we have days sales outstanding, which is the average number of days it takes for your customers to pay you. This is a vital metric within the construction industry because you have to be collecting on those invoices in order to stay alive. And then we have days inventory outstanding. So this is the average number of days it takes for you to sell your inventory. Next, we have the sale or purchase of assets. So this is the cash that's generated through selling assets like a truck or buying a new truck. And then we have days payable outstanding, which is the average number of days it takes for you to pay your suppliers. So you want to establish good relationships with suppliers so that you can be on good terms, like net 30 and net 45, and hang on to your cash as long as you can. And then we have adding to or paying down debt. So obviously, if you add more debt, your cash goes up. If you pay down your debt, your cash goes down. And while taking on debt does technically increase your cash flow, it should only be used to grow your business and make a profit. So you shouldn't be taking on debt just to give yourself a raise. And I've seen it done. And then finally, we have owner investments or taking out cash. So if you put money into your business, your cash goes up. If you take money out of your business, your cash goes down. So as the business owner, you should be striving to get your business into a healthy enough spot where you can take money out of your business that you're entitled to without sacrificing the health of your business. So all 16 of these drivers drive cash flow. So we went through a lot of information there. I do have a guide that I'll be emailing out to everybody that's in attendance with a little more information on all of these 16 drivers and what they mean. So don't feel like you need to remember all of these. So we just went through a lot of information on the drivers of cash flow. Let's see how it all kind of ties in together. So say we have a plumbing business, and last year we had 500 leads. Our conversion rate was 75%, which gave us 375 new customers. And then of our total past customers, which was 60, we retained 5% of those. So our total retained customers was 3, giving us a total of new customers that purchased this year of 378. If our purchase frequency rate was 2, then we had 756 total transactions. Our average purchase value was $500, and so our total revenue for last year was $378,000. Okay, so that looks at revenue. Now let's look at profit. So from that $378,000, our cost of sales was $132,000. So our gross profit was $245,700. Our payroll was $150,000. Our marketing expenses was $18,900, and our overhead was $20,000. So last year, our net profit was $56,800. So let's see how that ties into cash. So we had a decrease in our accounts receivable balance of $500. That means we collected on invoices that was owed to us. That's a cash inflow. We had an increase in our inventory, so that's a cash outflow of $250. We bought a truck for $55,000. We took on new debt of $15,000, and we took $5,000 out of the business. So our cash flow last year was $12,050. If we started last year with $35,000 in the bank, we ended with $47,050. So that's last year. Let's take a look at what we're going to aim for this year. So let's say we keep our leads the same at 500. And what about we only convert about 60% of those, so 300 new customers? Of our 50 past customers, we only retain 10% of those, so we have 5 retained customers, giving us total customers that are going to purchase this year of 305. If they purchase about 2 times, that gives us 610 total transactions. Keeping our average purchase value at $500, that gives us a total revenue of $305,000. If our cost of sales is $106,750, our gross profit is now $198,250. Our payroll expense is going to stay the same at $150,000. Our marketing expense is going to go down to $15,250, and our overhead is going to stay the same at $20,000. So that gives us a net profit of $13,000. Let's look at cash. We're going to decrease our accounts receivable balance by $10,500. That's cash coming into us that was owed. We're also going to decrease our inventory balance by $250. We're not going to buy any new assets this year, and we're going to pay down $2,500 worth of debt. We're also going to take $8,000 out of the business, leaving us a total cash flow of $13,250. So we're ending the bank this year at $60,300. So let's look. Our profit this year is looking to be $13,000 compared to $56,000 of last year. And our cash has gone up from $12,050 to $13,250. So it's not what you make in profit, it's what you keep in cash that matters. So step number 1, we generate more cash than we spend. Step number 2, we're going to create targets for profit and cash flow. So we need to find out where we want to go for each of the drivers of cash flow for this year. I don't like to use the term budget because it sounds constraining, so I'm going to use the word target because it's what we're trying to aim for. So we're going to create targets for profit and cash flow for all 16 of these drivers. If you improve one or more of these 16 drivers, you'll be on track to generating consistent positive cash flow. So the idea is to set targets for where you want to end up by the end of this year. And in order to do that, you need to look at where you've been for each of those drivers, use that as a benchmark, and then set your targets for where you want to go. And so by setting targets for the drivers of cash flow, you'll know what it is you're aiming for. And then each month, you'll know which of the drivers are on or off track to meet your targets, which means you'll know exactly where to place your focus in your business every month. And that is how you run your numbers, run your business like a CEO with the numbers driving your decision making. So step number 1, we generate more cash than we spend. Step number 2, we create targets for profit and cash flow. And step number 3, we need to keep score. So you can't win the game if you don't know the score. So your scoreboard allows you to quickly and easily see how well your business is doing and what's preventing it from hitting your targets. It also gives you an early warning system when things are going south so that you can fix it without any surprises. So how do you do that? You compare your targets for this year with your actual results for this year, and you find out which drivers are on track and which ones are off track. And then you create a plan every single month to focus on the 1 or 2 most critical drivers that are off track. These are the ones that if you improved them, they'd have the biggest impact on your cash flow for that month. So when I say scoreboard, what does that look like? So here's a scoreboard I just went over with my client last month. So I've got all 16 drivers of cash flow. The ones that are colored green are the ones where he's doing great. He's hitting all of his targets. The ones that are in yellow are kind of going askew, but they're not that pertinent yet. The one that's in red is the one that is affecting his cash flow the most for that month. So that's his day sales outstanding. Last year, he had his day sales outstanding was 30, so it was taking him on average 30 days to collect on his invoices. But right now, he's forecasted to be about 56 days out from collecting on his invoices. That's almost double. So that's what we talked about that month. That was his most important one that was affecting his cash flow. So you don't need confusing ratios and graphs in order to understand the health of your business. So step number 1, we generate more cash than we spend. Step number 2, we create targets for profit and cash flow. Step number 3, we keep score. And then finally, step number 4, we need to create an action plan. So as you can see, without understanding the 16 cash flow drivers and without setting those targets, you're not going to know where to place your focus. And there are thousands of small business owners that are stuck and can't grow because they don't have that cash to reinvest in their growth. They don't have the cash to hire people, increase their marketing, buy inventory, or buy new equipment, which leads to the owner getting stuck working in their business instead of on their business. So if you want to break out of this cycle, you need a plan of the most important steps to be done each month in order to move the profit and cash flow gauge closer to your targets for the year. And that is how you have a business that generates consistent and positive cash flow. So when I say action plan, what does that look like? So this is that same client that I showed you his scoreboard. So this was his action plan for the month. His objective was to lower his day sales outstanding back down to 30 from 56. And so then I have his next steps that he and I came up with together. So he's going to establish follow-up procedures with his existing customers. He's going to start regularly monitoring his accounts receivable aging report. And then he's going to establish qualifying processes for any new customers that come in. And then we have the owner. So who's responsible for carrying out this task? And for him, that was Sarah, his accountant. And the due date was February 28th. So your takeaway is that there is a predictable way to grow your profit and cash flow that enables you to make more money in less time and with less stress. So when it comes to the financial management of your business, there's really 4 key roles that you must have, and that's a bookkeeper, a CPA, a CFO, and a retirement planner. So your bookkeeper and your CPA keep you compliant and make sure that your taxes get done. But your CFO is really that forward thinker who's going to help you grow. And without all 4 of these roles, your business won't be as successful as it could be. So growing your profit and cash flow is inevitable when you understand how to move the right numbers. I've added a QR code here, which takes you straight to my calendar. So if you've ever found yourself thinking, man, I just really don't have the time every month to sit down and look at these numbers, or when I try to look at my financial statements, they just frustrate me, make sure you book some time on my calendar because I'd love to learn more about you and your business and if there's any way I can help. And so with that, I'll go ahead and open it up for any questions that we might have.
Okay, everyone. So we do not have any questions quite yet, Shelby, but we'll keep this time open for the next few minutes and see. Actually, Brian just wanted to say great information and thank you for your time. I'd like to second that. If anyone does have any questions, please feel free to submit those either in the Q&A section on the screen or in the chat box. We'll be happy to get that over to Shelby and we can answer any questions that way. If there aren't any further questions, then I'll begin the outro. So Shelby, thank you so much for your time today. And thank you so much to Optimized Financial Solutions for being a part of us today. We really appreciate you taking the time to be here with us. And I also want to thank everyone who joined us today on today's webinar as well. If anyone has any further questions, you can reach out to Shelby at the information on the screen, or you can reach out to me directly at kaylin@metalcon.com, and we'll be happy to get that information over to Shelby on your behalf. Without further ado, I'm going to say thank you so much for everyone who joined us today, everyone who's watching in the future on our recorded session. Thank you for being here, and we appreciate everyone's time. Have a great rest of your day, everybody. Thank you again, Shelby.
Yes, thank you all so much.